In today's video, I'm going to teach you why risking more per trade, whether it's Forex, crypto, stocks, whatever, is actually less risky than going and taking a bunch of other trades and risking small amounts on those trades. I have done this for years and it has served me better than any other risk structure in trading, is risking more on trades that I have high conviction in and skipping any other trade that I feel like I have to risk significantly less on. If you're new here to my channel, my name is Nick Shaw. I've been trading Forex, crypto, and stocks combined for almost a decade. I've made millions of dollars in Forex, crypto, and stocks. And on top of that, I've run this free Telegram channel for the past almost 8 years. I'll put a link in the description to this channel you can get into. There's my free training. In that free training, you get a link to join this channel because you can only join through the link. There's about 50,000 people in here, and I just share my daily analysis, or share my trades, or share my insights, outlooks, recaps, literally everything. So one of the last trades that I've just taken right now is this Euro AUD trade. And here, this is a weekly chart. You can see it's just a break and retest of a support resistance zone. I don't use anything else in trading except just support resistance. I buy at support, I sell at resistance. It's very, very basic. You'll learn all that at the free training in the link in the description. And on this trade, I have risked $50,000. This is an actual screenshot of my chart terminal. And I have bought right here at the support resistance zone. I put my stop loss below the zone, risking $50,000, and I put my target above for a $50,000 potential profit because I use one-to-one risk-reward ratios. I don't have to be a hero and target a huge move to make a profit. I just catch the smaller, consistent moves, and that allows me to make a nice, healthy profit year over year for the past decade. So what I'm going to do here in this video is we're just actually going to go to the random number generator. We're going to pick a random number so that we can, so I can show you this in back testing. And then, of course, you can also just do this, like just follow my trades in the Telegram channel because it's free and you can just see it for yourself live every day. But here we got the number 14. So let's go here to the chart. We're going to pick the 14 pair. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So this is AUD CAD. Now what we're going to do is we're going to go to, I need to make sure that I can use the 1 hour. So let me go to the 1 hour here. We're going to go back to a random time frame. And we're just going to click random bar. We're going to see where it takes us. This is December of 2022. And now we'll go back to the weekly chart where everything begins. And I'm going to clear all the chart drawings off here. And we will be going right here. So let's go ahead and get into it. So this is the exact way that I trade summed up in basically 10 seconds. Okay, so starting now. Price gets to a major resistance zone on the higher time frames like weekly or daily. I sell when it's at resistance. And then whenever price comes into that same zone and bounces as support, I buy at support. That is all I do. I put a stop loss below the zone if I'm buying and a target at 1-to-1, and I put a stop loss above the zone if I'm selling. Then I drag the profit target to a 1-to-1 risk reward ratio. This is all I do. And I break this down in like an hour in the free training video, the link in the description. But all I do is just this right here in that basically 10-second explanation. So with that being said, let's start here on the weekly. And what we're going to do is we're going to wait for very, very high quality setups, and we're going to ignore every other setup in between. You will find a million setups all the time throughout the day whenever you're trading this way. But what I found works best is just to wait for high quality setups and then risk more on those trades. So right here on the chart, I see a super, super clear zone above price right here. Now, where's the next support zone below price? I don't know. It could be that right there. It could be this low right here. It could be that low down there, but we don't really have a clearly defined zone quite yet. But here at the resistance zone, we have a nice clear zone. So what I'm going to do is if price gets into this zone, provided that the price action looks fine, I'm going to be entering a sell if price can get there. And we don't even know if price will get there, but we'll have to wait and see. So it needs to come deeper into the zone. Okay, sweet. So it gets into the zone, and it got right to the point where I was going to enter. Generally, what I'll do to enter these trades is I'll enter about halfway into the zone. So whenever I draw the zone, right, I'll draw the zone to where the most extreme high is, and then I'll draw the zone all the way down to where most of the price points touching inside the zone are. And then what I'll do is I'll just pick somewhere right in the middle of the zone, and then that is generally where I will enter. So that's how I got this little idea to just enter right here at this area. So what we'll do is we'll go down to the daily, and I'll go ahead and put the order in here. So the trade would look something like this. The trade would be a short position, put an entry here, and the stop loss needs to go above the zone. Not just above the highs and not way the hell up here in no man's land, right? But it just has to be above the zone to where if price does break past the zone, it's going to hit the stop loss and it's going to take you out at a loss, but you're not holding the trade forever. So, and then what I do is after I set the stop loss, I just drag the profit target to a 1-to-1 risk reward ratio. And again, you can already see how effective this is. And that's why I risk so much, is because these trades work out so like effortlessly easy, which is why I've just been trading this way for years, more or less. I've experimented with so many different ways to trade, different risk structures, different perspectives, different ways to enter, different mechanics for managing trades. I have not found anything better than this right here. It is so simple and so freaking easy. at least for me, although trading is risky and most people lose money. And you're probably going to lose money trading if I'm just being honest, because it's hard and almost nobody can do what I'm telling you to do right now. But and again, that's why I post everything for free in my Telegram channel. So if you check that out, at least you have a better shot at getting profitable than maybe most people who are trading smart money, institutional, order block, liquidity, bank manipulation strategies. That's ridiculous. I buy at support, I sell at resistance. So what I will do here is I will now go to the 1 hour chart. And the idea is after I get into a trade is I hold the trade as it goes into profit. Okay, you may have heard the age old like suggestion and advice that's like, if you have a losing trade, cut your losses quick. And then if you have a winning trade, hold your profits, like hold those winning trades. So hold your winners, cut your losers. That is great non-financial advice here in trading. That is amazing. Why? Because it ensures that you make more when you're right versus what you lose when you're wrong. Consider the opposite. The opposite is that you close all your winning trades early and hold your losing trades forever. Not profitable. Stupid, dumbass thing to do. Don't do it. Hold your winners a little bit longer than your losers. So the idea would be that if I entered here and price started going sideways, or it started slowly trickling up against me to where the stop, I generally just cut those trades, right? And sometimes I'll get out a halfway to the stop loss, sometimes 2/3 of the way to the stop loss, sometimes a third of the way to the stop loss. And heck, sometimes I get out at around break even, and then it ends up not working out, and I've saved myself from having a loss. I've done a couple YouTube videos right before this on this channel that talk about this exact thing, and I show it here in back testing, and I also show it in my actual forward testing live trades in Telegram. But that's basically all I do. So this trade is going into profit, so there are no modifications. We just keep holding it, and then we see if it either turns around, goes back into loss, or if it goes down here into profit. In the interest of time, I'm going to revert this to the daily, and then we're going to see if this works out. So this is a reason I put the stop loss past the zone, because if it gets here to this most extreme high, we don't want to get stopped out. If my stop loss would have been something like this, and it was really, really close to the entry, and we did not factor in this previous extreme high, what that does is it allows that you just have a higher likelihood of having the stop loss hit. Whereas in this case, we're not going to have the stop loss hit unless the trade invalidates. This trade is not invalidated, so I'm going to hold it. So it goes just above the zone. Again, that's why the stop loss should be a little bit further past the zone. And then it starts to pull back. Let's see if it actually turns over or if it reverses. So it's trying hard. So it tried to pull back. It tried to make a new higher low and go up higher. But in this case, that higher low failed. The higher low right here, it tried to go and make a higher high, failed to get past the previous high, made a lower high instead, and then it ended up coming down here to the profit target. This is great, and this is easy, and this is so much more simple than trying to trade a bunch of shit like this wherever you're, let's say like you're zoomed in here on the daily and you're using some zone like this. And then you're buying and selling here at this zone and you're wondering where you should enter. And then you have to have your profit targets a lot closer and stop losses a lot closer. And then you have crazy liquidity spikes like that right there. You have this crazy downward spike right here. So if you bought at this zone right here, that one would have liquidated the stop probably pretty quickly. You have spikes like this up higher if you're selling here at this resistance zone. What I do is I go out to the big picture, right? And I'm not saying I go and look at like 10 years of price data, right? I'm not going to the weekly and doing this and drawing like a zone over here from back in 2005, right? That's not what I'm doing. I'm going to the weekly chart and then I'm zooming in, quote unquote, right? You know, for the past like year or two of price data. And then I'm looking to see where's the most clear area that price had an obvious clear bounce. That's what I'm doing. And that's all I do. And I enter those trades. And truth be told, my trades generally don't take any more than a couple days to maybe a week or two. And as a matter of fact, over the past few months, I've made $350,000 trading Forex. I posted all my P&L and everything in that free Telegram channel. I've called every single trade live. And on top of that, most of the trades did not last any more than 2 weeks. I think I may have one or two trade that lasted 2 weeks or close to it, but most of the trades last a couple days to maybe a week. That's the average trade duration. Because again, a lot of them I just get out early if they're not working. So we will do one more example here, and let's go ahead and let's just go to another random pair, right? So number 6 here in the random number generator. So let's go to 1, 2, 3, 4, 5, 6. So Euro AUD. So I'm going to remove all the drawings from here. I'm actually in a trade on this right now, and I'll show you that one again here in a second, the one I showed at the beginning. We're in February of 2023, so let's go here to the weekly chart, and let's draw up the next clear support resistance zones. So we have a super obvious clear support zone here below price, and price actually just bounced there. So this would have been already a trade that hit the profit target because the stop would have been below. Target would have been probably right about there where the highs went. And this has already worked out. So let's just wait and see if we can get another trading opportunity. So is it going to come back into the zone? Nope, it breaks higher. So now we have to find the next clear resistance zone above price. So let's see. What do we have here? we've got a zone up here, and I think that is pretty clear. The only weird part about that zone is that little high leaking past it, right? That little pipsqueak leaky high jumping past the zone. But aside from that, everything else is pretty nicely defined. A proper entry would go about halfway to the zone. So let us see, boys and girls, if price can get all the way up into that area, and it does. So once price gets into that area, this is what the trade would look like. This is how it would be structured. The entry would be right here at this zone, right about in the middle. So that's where the entry would be. Now the stop loss needs to go past the zone and all recent highs at the zone. We've got a little high right there. The stop loss needs to go past that for this to be a viable trade. And then what we'll do is we'll set the profit target at a 1-to-1 risk reward ratio. So with this being here, this is how the trade is structured. This is how it's set up. Now what we're going to do is we're going to play it forward and we're going to watch it. And if price looks like it's not going to work out, right? If it starts going sideways for too long, or if it starts jumping up against me and going towards the stop loss and looking like it's not going to pull back or have any type of bearish sensitivity that sends us into profit, I will be closing the trade early and I will take a smaller loss on it. And when you're doing these, say for example, I have millions of dollars in trading capital. Just in Forex alone, I've allocated almost $2 million of my trading capital, my hard-earned money, to just trading Forex. And of that money, I put a small portion of it into an account. It's generally a couple $100,000. This account that I'm currently on, I started it at $350,000. And over the past, like, what's it been? It's actually been almost 4 months now because we're in February now. So since October of last year, I've grown this account, like basically doubled it, like at $350,000 profit. And I'm in a little bit of a loss this week, but with the open trades, I'm actually in break even. So it all kind of averages out. But again, I have win streaks and losing streaks, but net profit, money hand over fist consistently over and over and over. And it is very, very simple and basic. And it is because I get out of losing trades a little bit earlier and I hold my winning trades a little bit longer. Let's go to the 1 hour chart and let's watch what price action actually does here at the zone. We're going to break it down, okay? Nice and slow. So I'm going to play it forward here. So price looks like it just found resistance, probably along these little previous highs. Wow, as you can see how far back it went. So price just found resistance up here. Now we may be making a higher low here and go back up because it's still kind of in an uptrend, right? So we're going to have to see if it breaks out of these lows. So it tries to break out of these lows, quickly gets pushed back up. It's trying to make a new high. It's going sideways. We don't really have anything set in stone here yet. We need to get past these recent highs or lows to be able to make a decision. So it does in fact get past the lows. So the best decision is just to close this trade now early before it gets to the profit target. Just kidding. No, that's a stupid, dumbass idea. When it goes into profit, you generally want to hold the trade 90-95% of the time. The only exceptions here, if it's very close to the profit target, say it's like 80% of the more the way to the profit target, and it's like on a Friday when the market's about to close, in that case, like it's not, in my opinion, it's not worth like risking like holding over the weekend with the gaps and the swaps and commissions and fees and wondering whether the market's going to open up at a different price and the spreads, which may widen up, and then it's just a big pain in the ass. So in cases like that, yeah, so that might be 10% of the time you close a winning trade early. Fine, fair enough, right? Everything's contextual. There's nothing set in stone. There are no black and whites. There are no right or wrongs. There are no absolutes in trading. But with that being said, this is in profit. So generally speaking, we should just hold it. Now let's see, it's probably going to pull back a little bit, and we're going to see if it makes a lower high and turns over, or we're going to see if it pushes back up into the zone around to the entry. So this is fallen back to the recent low. Let's see, we need to break down further. And right now this doesn't look like it's easily going down, but it's still technically in profit. So now we've come back up here to the entry. What do we do? In my opinion, I'm not going to do anything right here. I'm going to hold this trade because it technically hasn't broken the zone. And here on the daily chart, it's it had a little move. Now it's just testing the zone again. Sometimes that happens. What we're going to start looking for is if it starts to break past this zone and then goes sideways. That will be a bad sign, and that will be a sign to get out of this trade early. So let's see. So it does, in fact, break a little bit above this zone. Now let's watch price action. If we don't quickly come back down below this zone, the better decision is to get out of this trade. So it's trying to come back into the zone. It's trying to do it. It's kind of going sideways. What are we going to do? Are we going to break up higher, or are we going to go back down lower? Ooh, it's getting the odds are getting stacked. What are we going to do here? Is it going to go up or down? It's going sideways. And here we do, I mean, yeah, we barely took out the highs. I mean, it wasn't really like a nice parade higher. But this is one of those trades that like now it's not looking as good anymore. So I'm just going to wait to see which direction price has the actual breakout. And are we breaking out to the upside, or are we just taking out the high again? What are we doing? This looks like it's probably going to go up. We don't have a nice clear breakout. Wow, that was That was very, very strange. So let's see if it continues down or if we go and try to go back up again. All right, are we going to break past the highs or are we going to keep playing this little stupid game here? So now it's going past the highs. So in this case, what I think the better decision is based on the context, right? We had it go into profit and went more than halfway to the profit target, came back, went sideways, went a little bit into loss, a little bit into profit again. Now it's come back up very quickly and gone up higher. This looks like a trade that is not going to work out. So what I'm going to be doing is I'm going to be closing early here and I'm going to close halfway to the stop loss, right? This is roughly, depending on exactly where you close, it's more or less like halfway to the profit target. Or I'm sorry, halfway to the stop loss. So with that said, I'll be closing this right here, and this results in half of a unit of risk. So for me, if I'm risking an average of, let's say, $50,000 per trade, sometimes I risk $75,000 per trade. Sometimes I risk $25,000 per trade. Follow my trades in the free Telegram channel if you want to see for yourself. But on average, it comes out to about 50K risk per trade. So if I'm risking 50K per trade, instead of, say, like a tenth of that, like 5,000 per trade, I'm taking win and loss and win and loss and wins and loss. If I'm risking a higher dollar amount per trade, it is less risky because of two things. Number one, I take fewer trades. So your trading decisions are not as muddled. You're not going to get as many losing streaks in a row in quick succession because the win rate is likely going to be higher if you're being more selective. And since you're not taking as many trades, it allows you to think more clearly for the trades that matter. And number two, whenever you do actually have trades that win, you're not making a tiny profit. You're making a profit that actually grows the damn account. Why wouldn't you want to do that? That makes so much more sense than taking a million trades, trying to catch a 1 to 10 risk to reward ratio and be a hero and running through all the ridiculous losing streaks and getting to the end of the month having taken 100 trades and you're sitting at break even net of fees and commissions. Stupid, dumbass way to trade. I think it is less risky to risk more money on higher quality trades because it forces you to be patient and wait for those high quality trades. And you can manage them a lot more, let's say, contextually, using a lot more discretion and intuition and price action discernment than you could otherwise if you're just taking a million trades and letting the stats play out. It's better to actually use your brain and to give 2% of a shit and manage the trade. So that way you can close it early if it's going against you, thus reducing your average loss, and then hold it if it's going into profit, thus increasing your average win. So in this case, we will elect to close it here. I'm going to put this little line here to show we're close. So about halfway to the stop loss. So if the last one won, which was $50,000, if this one lost, we lost $25,000. So over two trades with only a 50% win rate, using a 1-to-1 risk reward ratio, but managing dynamically, we've still made a $25,000 profit. Net of fees and commissions, which for only two trades is not going to be that big of a deal. The stop losses are so wide here on the higher time frames that you're not having to use crazy, insane position sizing. So this right here, and now what we're going to do is we're going to see what would have happened. Would this have played out or would it have actually gone to the stop loss? Let's see. So this looks like it went higher up there to the next zone, and then it would have actually gone to the stop loss. So in this case, this would have been a $50,000 loss. Instead, because we managed it dynamically and we were able to watch what was going on, and we managed it with a little bit of discretion, all that means is that if it looks like it's going against you and it's not going to work out, close the damn trade. Sure, you get better with this inexperience. Don't ask me what exactly do you have to look for in order to make sure that you know exactly when to close the trade early or in profit or break even. There's no black and white rules. You have to get on the damn charts. You have to follow my live trades in Telegram. That way you can actually see this shit play out day in and day out. And then you learn through that experience to start making those instinctive, intuitive, discretion, price action based, contextually appropriate decisions that allow you to get the hell out of a trade that looks like it's not going to work out and stay in trades that start to work out. There's no silver bullet here. There's no magic potion you can drink that's actually going to show you how to do this. You have to learn through experience. I'm showing you right here firsthand how to get that experience. And I have been doing this for years and also have the whole damn free training video at the link in the description that just teaches you the whole thing and then allows you to follow my trades in Telegram. So I would just do that. That's how you're going to gain the experience. That's the most effective way to learn trading. No course can teach you that, right? And I've sold courses before in the past. No course can teach you that. You have to gain experience, which is why all I do now is I just live trade. I show people, look, this is exactly what I do. Here's all the exact specific details. So this went up and hit the stop loss, so this one resulted in a loss. So now we're going to clear all the drawings. The last thing I'm going to do here for you in this video is we're going to go over this trade that I'm in here on Euro AUD. So you'll notice I'm doing the same damn thing. I'm here on the weekly chart. Price has came into this zone right here, and then it's touched this zone. And what I did is as soon as price got here into this zone and started to reject a little bit, I entered a long position. So my long position is like right under current market price right here. This is my exact trade here. So the entry is 1.6768. So I've entered a buy right there. I put a stop loss below the zone for 50K risk and a target of 50K profit. I am going to manage this trade the exact same way that I have just showed you in the last 2 examples in back testing and the last hundreds of examples I have in my free Telegram channel. If it goes into profit, I'm just going to hold the damn trade. And if it starts going sideways or starts breaking or starts going against me, I'm likely going to exit the trade a little bit earlier. I might lose 20K, I might lose 30K, whatever it is. But in worst case scenario, if it goes all the way to the stop while I'm asleep, that's what a stop loss is for. It's there for just like emergencies in case you can't manage a trade dynamically. It's there to help you structure the max risk for the trade. And then also, if price does in fact go there, yeah, sometimes you're going to get your stop loss hit. So sad. You're not going to win every trade and whenever you're trading. So it is what it is. And that's the worst case scenario, is I lose that dollar amount. So that's what I'm going to be doing for that. I shared this trade in Telegram as well. And I also put this whole little spiel here about it. So that way it's like, it's one of the things I share, which is like, this is it's like a perfect trade, but not in terms of predicting price, but you can't, because you can't predict where price is going to go, but it's perfect in terms of risk structure. Here's what a perfect trade equals. And you can screenshot this here on your phone, or you can copy and paste it in your notes section if you're in the Telegram channel. A perfect trade equals, number one, a clear higher time frame zone. You have to have a super clear, obvious, ridiculously painfully clear support resistance zone in the higher time frames like the weekly and daily. Number two, wait for price to come into the damn zone. Wait for it to get there. Do not do anything before price gets there. You can make this easy by just setting an alert at the zone. If you do that, as soon as price gets there, it sends you an alert to your phone. Boom. You have a TradingView alert that told you, hey, price is here at the zone. Sweet. Now, number three, you have to enter whenever price is in that zone. You cannot enter after price has already moved past the zone or bounced and moved out of the zone. In some cases, you can do that, but you don't want it to move very, very far from it, right? You want to be entering relatively in or very close to the zone. If you wait for price to bounce away, it screws up the risk structure. Your stop loss has to still go on the other side of the zone, so it has to go way back. And then your profit target gets dragged out to like 1-to-1 risk reward ratio, which is usually double as far as it would be if you had just entered inside the zone. If it hits the zone and already starts bouncing away before you've entered because you were asleep or you were at work or something, don't take the trade. Wait for the next one. It's okay. That's why you risk so much money per trade, because it allows you to really go in on the ones that are high quality. Number four, you set a stop loss past that zone, risking what you're comfortable with. Number five, you set a 1-to-1 take profit. This is pretty straightforward. Number six, which is what we talked about here in this video, you close a little bit earlier if it, quote unquote, looks like it's not going to work out. I recognize this is subjective. Remember, I told you, you have to give 2% of a shit. You have to use 2% of your brain. You have to use a little bit of your mental bandwidth and not be a complete freaking retard and enter the trade and then manage it dynamically if it looks like it's not going to work. You get better with this as you gain experience. Okay, so it's not going to be something you just do right from the beginning. Okay, get some experience. In the free training, I talk about how you can set up a Discord server to track all your trades in a very, very simple way that takes literally seconds to track each trade. It's so easy, it's so simple, and that is included there in the free training video with the link in the description, how to set up your trades to track it so you can start managing your decisions and learning how to close trades a little bit earlier and hold them if you're right. And number seven is, if it doesn't go into towards the stop loss, you just hold the trades to take profit most of the time if a trade goes into profit. And so again, you can screenshot this here on your phone. I'm going to hold it right here for a second. That way you can screenshot it. And here, let me move the cursor out of the way. Okay, so you can screenshot this right here. A perfect trade equals all this stuff. Boom. All right, so you got that screenshot, whether it's on your computer or your phone, and this is it. So this is why I'm making the argument that whenever you are trading, risking more per trade is actually a less risky way to trade as compared to taking a million trades, trying to have a great risk reward ratio, letting the stats play out, and getting to the end of the month having taken 100 trades, wondering why you're not making any damn progress trading. That's stupid. It's foolish. And what's the most painful is that it's just not necessary. You can risk more per trade, and if you are risking more per trade on high quality trades, it is a better way to trade, in my opinion, because of how well it works in my experience and over the course of the past almost a decade that I've been teaching trading. And I've had over 4,500 clients and taught them all the same thing. It is a very, very simple, basic, easy way to train. With that said, click the link in the description, go to my free training, do that free training, watch the whole thing, and then at the end of that, you can click to the next module there to join my free Telegram channel, and you can actually follow this shit all live for free. Hope this video was helpful. Cheers, my friend.